Good evening, everyone. Just a quick update to yesterday's analysis that we released about the short euro signal, which is still valid. And a lot of people took the trade almost immediately. Particularly well done for intraday traders who managed to score a good 60 to 70 pips on the move and then close out. For swing or position traders or anybody who likes trading slightly longer term, the signal is still very much valid. And just updating our counts now to reflect the latest price action and to just show you where the EUR-USD is going next. So yesterday, if you're following our video, you'll know that we talked about how the key level of 1.29 had been broken once over here and then had been retested twice, and that the volume spike at that time was significant around about this bit here, where there was a lot of sell pressure indicating that we are looking at further aggressive short momentum, and we saw that almost instantly afterwards. This price action was not here at the time when we recorded that video. Just a little bit of that candle was there, and as you saw later on, that accelerated towards the short side very quickly for a good 70 plus pip profit for anyone who was trading an intraday style. Now, we also said that for any longer term traders that they can enter that trade at the time, but that they should set their stops slightly higher, for example at 100 pips or 150 pips, so that they can secure the position and stay in the trade even if there is a corrective pattern that emerges later on. And as you can see here, the corrective pattern has emerged after the 70 pip move downwards and has now gone into waves 1, 2, and 3, with 4 just having been completed just a little while ago. And we're now looking at the final leg of this impulse correction before it returns to the short side. Let me show you the 4-hourly view of this situation. Now, as you see the price action over here, it's turning into a bit of a wedge. I've illustrated this by drawing these two lines here for you. What this means is that there are constantly, without going into the details of Elliott wave theory regarding ending diagonals, these two lines represent a bit of a wedge. So what you're looking on screen on screen right now is a wedge of sorts where price is constantly making new lows which are higher, the next low higher than the previous low, and the next high lower than the previous high, which indicates that the price is being squeezed into a bit of a wedge where it typically makes 5 interactions with the wedge, which is 1, 2, 3, 4, and ideally 5, or sometimes it gets truncated here, and we need to figure out if it stops here at all or it will go on to hit that top over there and around the 1.3 mark. In this case, we feel that the price action will not be able to go up until that 5th point before reversing to the short side. And the reason we say that is that if you look at the price action for the moment, I'll switch to the 15-minute chart to make it slightly clearer for you. The price action here is clearly exhibiting the final move in the wave 5 of this corrective pattern here. So we've seen wave 1, wave 2, wave 3, wave 4. Now, how do we know where this wave 5 will end? And more importantly, why are we contemplating that this wave 5 might end much before that top line? And the reason we say that is, if you followed the webinars, the training webinars I've held where I've discussed Elliott wave SSI setups and how to trade with very low risk and very high profit targets, you'll have seen how I demonstrated price action and how there are Fibonacci relationships between waves. So if you haven't watched that webinar, once you're done watching this video, please do go and attend that webinar that we hold quite frequently, and you'll be able to see what I'm talking about. But just over here, just to tell you why the price is going to stop somewhere much before this point here, is because if you notice, wave 3 is much larger than wave 1. In fact, if we measure wave 1, it had a move of about 52 pips. This will vary by a few pips from broker to broker, but the move here was about 52, and the move from the end of wave 2 to the to the end of wave 3 was 107. So it's almost twice the size. The move's length is twice the length of the first move, which means that wave 3 has extended. Now, whenever you see such a situation, you know that wave 5 cannot possibly extend because one of the waves has extended, and according to Elliott wave SSI theory, we're going to see a normal wave 5 progress, and we can calculate a future target with quite a high degree of accuracy. Now, how we do that is the reason we are saying that the price will not reach that point is because the target is a bit too high on this wedge, and the price is most likely, and as you can see, it started deteriorating here. The aggression in the move has started deteriorating here quite quickly. The price is most likely to stop somewhere here and move short again. So what we're looking at here is a truncation, and how we calculate that is basically you take the length all the way from the start of wave 1 to the end of wave 3, and that's 126, almost 126 pips. Now what you need to do here is calculate two key Fibonacci ratios as I demonstrated in the webinar series, and we'll use a very simple, you don't need any fancy software, you just need a simple Windows calculator or even a physical calculator if you've got one. Simply calculate 38.2% and 61.8% of that move that we just measured. So that move was from here all the way to here, which was 125 pips. Let's say it's 125. A pip here and there doesn't make much of a difference. So 38.2% is 0.382 times 125. That means our first potential target from the end of wave 4 is at a height of, or a length of, 47.7 pips above wave 4, wave 4's end. So we go from wave 4 and we move the cursor up to about 47. Look where it stops, just about here. That's where I've placed that blue line. That is my first target, and that target is most likely to be achieved, and that's why right now iTeam Financial members, whoever's got a Trade Copier account and is a Platinum or Platinum Pro or Elite Managed member, they have had this trade executed right over here. We've executed this trade just at the time we saw wave 4 complete, and we're looking to capture about 45 pips. It's an intraday trade, so it's a small trade, and we'll be looking to short the euro from that target if the price stops there. Now, why I say if the price stops there is because there is another key level that needs to be calculated, which is 0.618 or 61.8% of that big move from here to here of 125 pips, and that's 77 pips above the end of wave 4. So we calculate that move and we say, okay, fine, so 77 pips, what would that look like? Around, oh, we've lost screen here, somewhere up there. Let me just let me just do that and figure out how much further up 77 pips looks. So it looks about that much. So our next target, if I were to draw a line, what was that point again? Let me just find that point. Sorry about this. Here we go. 77 pips. It shows up at around 1.2998, at exactly 1.3. So you notice how the psychological level of 1.3 is bearing up to be the second major target. And if the price does reach there, you can only imagine how aggressive the short movement will be. So the second target is just around, let's assume for clarity's sake, it's around the 1.3 mark. We'll just put it there. Here we go. Now, given the nature of this movement, there's also another thing to consider. The fact that wave 3, the one here, has extended, it's quite likely that wave 5 will be the same length as wave 1, because as I discussed and I trained people on the Elliott Wave SSI Setups webinar, the link for which is below this video, you'll notice that whenever a wave extends, whenever wave 3 extends, wave 5 and wave 1 are typically the same length. So if we take that into consideration as well, we have these two targets here. Yes, that's absolutely correct, and they're both valid targets. This is a 38.2% target, and that's a 61.8% target. But what's the most likely point? Which one? This one or that one? I mean, should we place a take profit here and get out of the trade? Should we close a bit of a position here? What should we do? So what we'll do is we'll measure the length of wave 1 and see how much that was. That was about 51 pips ish, roundabout. So we'll go up to the end of wave 4 and we'll just trail the cursor up 51 pips, and notice how close to our 38.2% target that 51 pip measure is. So even though this is a likely target, I'm not going to place my target expectations at that point. I have a high degree of confidence in this location being a high probability target for this strong last leg, wave 5 of this move. So the 38.2 is the winner for me, and I'm going to be placing our take profit, which I already have. Any Platinum Pro members who've had this trade automatically executed tonight on their account will be seeing a move that, if this price action takes us to this target, which is a very high probability target, they should be seeing a 50 pip win overnight and wake up to a 50 pip gain in the morning. So this is the latest in the price action, and this is exactly why I believe, according to Elliott Wave SSI, we are not going to stop at this point up here, which typically a wedge, the price would travel all the way up, but there is a higher probability target at 1.269, because not only is the price the wave 5 not only does wave 5 have a high probability target at 38.2%, it's also equal to the length of wave 1, as I just showed you, at 51 pips. So this is a high confluence area, a high probability target, and because the price at this point is 1.2969 on this chart, 1.2969 is somewhere around here, so we expect this wave to stop around this point and reverse short. So if you're looking to place your stops again at a better position, now if you're a swing trader and you took the trade we sent out yesterday, no problem, stay in the trade, and maybe move your stop to about 1.3150. That's a safer point to be in case there's high volatility with any news action. But looking at a pretty safe short move from here all the way down, and mind you, this is going to be a very aggressive wave 3, a very aggressive short move. So if you're gearing up for this trade, you're going to be pleasantly surprised as to how aggressive this move is going to be. So I hope you've enjoyed this video. We've already executed this trade. We're going to travel the length of the last wave 5 move for our members tonight. Probably going to secure about 50 pips on this and get out of the trade. We're going to wait for the next wave 1 to form in the down move, and then trade that big mad wave down in the short direction as well. So if you're interested in getting those exact signals, then please do join. Right now would be a good time to join the Platinum or Platinum Pro programs, because we're soon going to be releasing our gold, oil, and silver signals on that as well. And those, obviously, as you know, the gold and any other commodity market is a fairly lucrative market to be in right now, given the world's instability. So once again, hope you've enjoyed this little update, and if you are going to be joining, so just for watching this video, you do have the opportunity to avail a 25% discount. So the code is 25 once, as it's shown on this screen here. And you can use that as checkout if you'd like to join ITM Financial tonight, and join us all for taking some really nice, really big trades this year at the close of the year. Thank you very much.